Why I don't trade daily? You think making money in the stock market means staring at the chart whole day. You believe every day without a trade is a wasted opportunity. I used to think that too. But today I own investment worth lakhs and sleep peacefully every night. And I don't feel the need to trade every day. In this video, I'll explain why I stopped chasing daily profits, and that decision changed my financial life completely. The biggest lie. Let me tell you the biggest lie the investing world sells you every day. To make more money, you need to trade more often. It sounds logical. The more you work, the more you earn. So you assume the more you trade, the more you will make. But the stock market doesn't work that way. In fact, constant activity often becomes the biggest obstacle to building wealth. Think about it. Brokerage benefit when you trade. Financial media needs exciting headlines every day. Social media rewards people who post daily buy and sell calls. Everyone has a reason to keep you active. So you hear messages like, don't miss out this breakout. This stock could double tomorrow. Sell now before it's too late. Buy this before everyone else does. The result, you start believing that sitting still means falling behind. But that's the lie. The stock market doesn't reward people for being busy. It rewards people for making good decisions. One well-researched investment can build huge wealth than hundreds of impulsive trades. The stock market is designed to transfer money from impatience to patient person. This idea captures a powerful truth. Patience is often a competitive advantage. Successful investors do not wake up wondering, what should I trade today? They ask a different question. Has anything fundamentally changed about the business I own? If the answer is no, they often do nothing. Doing nothing may not feel exciting. It won't make headlines. But over decades, it can be the most profitable decisions you can ever make. The biggest lie is that constant action creates wealth. The truth is that disciplined patient often does. Imagine buying a farm. Suppose you buy a beautiful farm. Would you sell it tomorrow because your neighbor offered 2% more? Of course not. You will let it grow. The same applies to great businesses. When I buy a quality company, I am buying a business, not a lottery ticket. Daily trading creates emotional decision. You believe trading is about charts, indicators, technical analysis. It's not. It's about controlling your emotions. The more frequently you trade, the more opportunities your emotions have to interfere with your decisions. Think about what happens during a normal trading day. The stock rises 3% and now you feel greed. You convince yourself that it will go even higher and you buy at that high price. Now the stock falls 5% down. Fear takes over. Instead of following your plan, you panic and sell. After few hours, the stock recovers. Now you feel regret. Then you see another stock hitting upper circuit. You do not want to miss this opportunity. So FOMO, fear of missing out, pushes you into another trade. Notice the pattern: greed, fear, regret, FOMO, revenge. These emotions can repeat several times in a day. The problem is that emotions are terrible investment advisors. They encourage you to buy when the excitement is high and sell when the fear is greatest. Exactly opposite of what a successful investor does. The hidden cost that nobody talks about. What do you talk about trading? Usually you talk about only one thing: returns. How much did you make? But very few people ask one very important question: how much did you lose without realizing it. Every time you trade, there is a cost. Some are visible cost, others quietly eat away your wealth. The obvious costs are brokerage fees, taxes, exchange charges, and slippages. One trade may cost very little, but hundreds of trades over many years may add up to a significant amount. Then there are hidden costs. Every trade demands your attention. You spend hours watching charts, refreshing stock prices, reading news, and worrying about every market move. That time you could have spent learning about a business, building another skill, or simply enjoying your life. There is also an emotional cost. A losing trade can remain in your mind all day. It affects your mood, your confidence, and sometimes even your sleep. The market closes, but stress often doesn't. And perhaps the biggest hidden cost is interrupting compounding. Imagine planting a tree. If you dig every week to see whether the roots are growing, you will never let it become a strong tree. Investing works the same way. Every unnecessary trade interrupts the power of time. Great businesses need years, not days, to create extraordinary wealth. The market gives you countless opportunities to trade, but very few opportunities to let compounding work uninterrupted. Sometimes the most expensive decision isn't making a bad trade, it is making too many trades. Wealth is built by waiting. Most fortunes aren't built by trading, they are built by owning a good business, reinvesting, allowing compounding to work. Compounding is slow in the beginning, and one day it becomes unstoppable. The hardest part is give it enough time. What do I do instead of trading? Instead of watching charts all day, I read annual reports, study businesses, improve my investing knowledge, focus on my career and family, wait patiently for opportunities. That's how I stay productive without feeling the need to trade constantly. People often ask me, why don't you trade every day? My answer is simple. My goal is not to become busy every day. My goal is to become wealthy. The market rewards patience far more than constant activity. If I own a wonderful business, why would I rush to sell it? Sometimes the smartest move in investing is no move at all.